Well, hello, this is Jeremy North with your educational and economic update for August of 2022. In this month's video, I will discuss major headlines that influence markets in July and economic and market events that we are looking at to influence August and future returns. Please stay tuned at the end of the video for our always exciting required disclosure statement. Well, July was a very good month for the stock markets. The Dow Industrial Average was up 6.8. The S&P 500 was up 9.2, and the NASDAQ rose 12.4%. Despite these great monthly returns, all stock markets are still down quite a bit for the year. And many fear this may be what Wall Street calls a dead cat bounce. I don't like using the term. My kids are very fond of cats, but the name dead cat bounce came from the idea that even a dead cat will bounce if it falls from a high enough place. Some also call this a sucker's rally as it occurs within a downtrend. Technical indicators usually tell us if the market momentum is enough to reverse the downtrend or bear market. Technicians usually look at prices and what's called moving averages. These are measured in days, and a line is drawn on charts to indicate various popular moving averages. The 50-day and 200-day moving averages are most often used. Basically, if the 50-day moving average is below the 200-day moving average, it's considered a downtrend. We are still in that mode. Once we get a bigger move and the 50-day is above the 200-day, technical analysts will consider that a reversal of the downtrend and expect the markets to continue to the upside. We will see if this recent boost in July continues or not to get us to that trend. So what headwinds are we currently looking at? Well, a few economic items that are looking dismal. First, it appears by the most popular indicators that we are due for a recession and may already be in one. Every economic recession since the 1970s has been preceded by an inverted U.S. Treasury yield curve. And indeed, the U.S. Treasury yield curve is currently inverted. This means that short interest rates decline in several regions across the globe in addition to North America. The high inflation that has been hurting many Americans, and we have seen a slowdown in certain areas. The high price of gas and jet fuel created a slowdown in travel across the U.S. and the world during July. Additionally, as we have all experienced, food costs have jumped considerably. The Federal Reserve has raised short-term interest rates by 0.75% in order to fight inflation in both June and July. This has caused consumer sentiment to drop to levels not seen since the 1950s. That's making consumers feel very gloomy currently. There is some hope that the economy is already contracting and that the Fed won't have to continue to increase the same rate increases moving forward. Many think that rates may stabilize soon and possibly even come back down next year. The Fed is keeping its eye very close on various economic data points to determine how much or how little to increase rates. Some prices have dropped quite a bit already, such as gasoline, which is now around $4.19 per gallon on average, of course, depending on what part of the country you live in, versus roughly $5.19 just a month ago. Additionally, supply chain issues have recovered somewhat over the last couple of months. This has given investors some hope that the Fed will be able to manage inflation without causing a deep recession. Remember, we are here to help. As I mentioned last month, our general overall retirement investment strategy has been to keep a portion of our clients' portfolio protected from the market. We do this because we understand how volatile the market can be, and having a sizable portion in protected accounts can benefit your overall portfolio volatility, help stabilize your retirement income, and can put some certainty in this very uncertain environment. As always, we are continuing to diligently assess the economic and political implications for your investment portfolio. Should you have any concerns or questions, or would just want to talk and discuss your personal situation, please give us a call or give us an email to jnorth@360ira.com. With all that being said, here's the disclosure that I'm required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. This is Jeremy North signing out for the month of August. I hope you have had a wonderful summer and continue to have the